I'm Matt Bouchard with REIT.com, and I'm joined today by Scott Hileman, Director of Real Estate Advisory Services with Deloitte Financial. Scott, how does the U.S. commercial real estate market currently stack up in comparison to other global markets following the Great Recession?
Well, certainly the U.S. is in a lot better shape right now in terms of where we are in the market cycle and where we are with respect to investors. I think we're seeing a lot of new investors coming in to the U.S. from outside the country, and that's a reflection of where we are in terms of the market.
And what do you think will be the most significant impact on an ongoing basis following the Great Recession?
I think what people learned is this kind of irrational exuberance that came out of the market in 2007. I think going forward, people will be a lot more cautious and will definitely dot their I's and cross their T's in terms of whenever they're making new investments, in terms of understanding the markets, the properties, and what have you.
And do you think that caution will stretch across the real estate gamut through sectors, through deals, capital markets?
Yeah, I think certainly with respect to investors, it will remain in place, and certainly with respect to the banks, because the banks are under lots of regulatory pressures, and they'll continue to be cautious in terms of making new loans.
Now, heaven forbid we go through what we went through a couple years ago, but in the event that it does happen, how prepared do you think the commercial real estate market, specifically here in the U.S., is prepared to withstand something like that?
Again, I think having gone through that Great Recession, I think everybody is much more cognizant of the signs. So whenever we start seeing issues pop up, I think there'll be an adjustment made more quickly than maybe there were back in 2006 and 2007 at the height of the market.
And do you think there's a difference in terms of preparedness between the companies on the public side of the market versus private players?
I think the public markets have done a better job of getting their balance sheet cleaned up, raising capital. So I think they're a little bit ahead of the curve in terms of being able to make new investments. So at this point, I would say the public companies are probably in a little bit better shape.
Scott, thank you so much for joining us.
Sure thing.
For more on this and other news and analysis, be sure to visit REIT.com.